Welcome to Inside Abode, ladies and gentlemen. How are y'all doing? We're back. We got another episode, and we have a good friend of mine coming on today. But before we get to our guest today, I want to subscribe. I want to invite you to subscribe to the Inside Abode podcast. We talk about all the things, and this one will be packed with some good information because we have someone that's really good at talking. We have to get. It's Friday afternoon, so I got to make sure that we get this person back to their family. So let's go ahead and get started. This person's been in the real estate for 10 years. And it's crazy because it looks like he's about 3 years in, but he's actually been in for 10 years, done a lot of things, seen a lot of things. His wife and 2 children, has a little beautiful family, lives in Gig Harbor. And actually, if you talk with this person, you probably won't be able to have a 5-minute conversation. It might turn into a 45-minute conversation. And he's a throwback. This person is a throwback. They like to talk on the phone. And so that's been an interesting thing as well, because this person likes to talk on the phone, which in a day and age where everyone likes to text and everything. So with that, I'm going to give my guest today a shout out, because also it's the first time that we've had 2 Libras on that have birthdays within, I think, 3 or 4 days. This is the first time this ever happened on the Inside Boat podcast. Welcome, my guest, Ian Broadie, ladies and gentlemen.
Howdy. Libra, baby.
Going,
we got him.
Hey,
yeah,
Libra
we're squeezing
gang,
this
man.
in right in between our birthdays. You were like 2 days ago. I'm tomorrow.
Yep. Libra
Birthday
gang.
week, baby.
It's funny because the office, like when Libra season comes, it's like 6 people that have birthdays within like a 10-day
You
span.
feel it in the air.
Crazy.
There's a vibe.
Oh, you definitely feel it. You definitely feel it in the air. Who is it? It's me, you, Maya, Dugan, Shelly. That's 5.
That's all like this week.
Yeah, that's just in this 7-day.
Yeah.
So Anne is busy doing her thing with the birthday posts. I always love reading those. They're so great. She's very talented in that way. So anyway, I just wanted to, thank you for coming on, man. And we're just going to make a real quick one. Our challenge today will be keeping this to about 15 minutes. So you have my word on it. I need to get you home. I know. We've already been talking for literally 2 hours. Anyway, man, I really appreciate you coming on and talking. We're going to talk about mortgage rates today. So you are very knowledgeable. You follow the markets. You invest in the markets. You have an investor mindset. You dabble. But let's talk about mortgage rates. And I think people and talking about, like, will they fall? Will they not? Will they fall with the quarter rate points that we have coming up? I think we have 2 scheduled, probably, that the markets seem to think that we're going to have 2. We don't know until the day comes.
Of course.
But what are your takes on the mortgage rates right now? And is it good for buyer? And what should buyers be thinking about based on that?
Yeah. Well, I mean, interest rates, they've been on the tip of our tongues for years now. It's like the only thing that we talk about since 2022, when they skyrocketed and historically jumped up. So it's been a part of our conversation. And yet still, everyone, I get buyers asking constantly about, like, the direction of interest rates and talking about the Fed. And of course, and so this is really kind of why I thought, let's talk about it, because I just feel like there's still kind of a misunderstanding here. So I find myself explaining this with buyers a lot. And, we just had a big, huge announcement. The Fed dropped rates a quarter point. Everyone's very excited. Yeah. It was expected. We've kind of expected this for the last at least month and a half or so. And like you said, we're expecting 2 more rate drops likely by the end of the year. So that's, that's exciting to see, depending on where you're at. But people who are really invested in paying attention might notice a funny thing. When the Fed dropped rates, we saw mortgage rates go up.
Yeah.
Yeah. And and so I got a lot of people calling and they're like, what the heck? Like, I thought we were dropping a rate. And so I just want to dispel this a bit. The Fed doesn't control rates. They don't control mortgage rates, I should say, more specifically. Right. They control the overnight, the federal funds rate. That's what banks use to borrow. If you're going to get an auto loan, if you're going to get short-term debt, that's what is going to determine your interest rate. So if you've got a HELOC even right now, that's going to get impacted by this quarter rate drop. But
Mm-hmm.
mortgage rates are a different beast.
Yeah.
30-year fixed loan is determined by mortgage-backed securities. And there's a market out there of investors who go and buy a bond. So if you wanted
Yeah.
to get a safe investment, you would go and invest in the bond market. There's the 10-year treasury is like the safest in the world. And the
Mm-hmm.
10-year treasury is kind of the benchmark that everyone else follows. Mortgage-backed securities are like that. They generally
Yeah.
trade, 1.75%. Right now, they're like 2% above the 10-year treasury. And, as that moves, so does our mortgage rates. The
Yeah.
Fed is able to indirectly influence that with their action and by setting a baseline for people to borrow in the
Mm-hmm.
market. So they influence it. But when we saw this, the Fed announce that they're going to drop rates a quarter point, it didn't directly impact the mortgage market. There was because and the other thing too is that we started seeing mortgage rates drop in August because the BLS data came out showing that
Mm-hmm.
that unemployment was on the rise.
Yeah.
Kind of a funny thing about real estate is
And just for people listening, what is the BLS?
a Bureau of Labor Statistics.
Yeah.
This is like the nerd department of the
Yeah,
government.
I know.
Yeah.
Like if me and you are talking, I know exactly what you're talking about. I'm just
Yeah.
saying, just want to make sure people know.
No, I mean like for the like it's just like basically these are the bean counters. Like they are going through. It's a very important part of our government, but they go through every month and track things like inflation. Like when like this is where we get all of our numbers. They talk to business owners. They do lots of surveys, and it was big news beginning of August when they revised their numbers and unemployment was going up and jobless claims are going up and
Yeah.
anyway, so all of this, the funny thing about real estate, what I was saying is that sometimes um, bad news is kind of good news in a weird way. Like I'm not rooting for the economy to go down, but real estate does tend to do better when the rest of the world goes down. So I don't want other people to suffer. But when you hear about like unemployment going up, that probably means potentially interest rates going down,
Yep.
mortgage interest
Yep.
rates going down, and generally the Fed's going to drop rates as well. So because of that information, the bond market reacted. They started driving down rates. And it was a big, huge drop, dropped almost like a full point in the span of a month. It was a really big deal.
Mm-hmm.
But the bond market is very predictive. So like
Mm-hmm.
when this new information came out, then they started reacting to like the future expectation of, I want to put a secure place for my money and like potentially future information like it's going to be bad. Maybe the market's heading in a bad direction.
Yeah.
The counterbalance to that would be like inflation data is the other factor that's right now we're kind of dealing with is
Yep.
that if inflation goes up, then bond investors require a higher interest rate because if the interest like if like people will talk about like, oh, we're going to get like a 5% interest rate or something, but it's like, well, if
Mm-hmm.
inflation's 3% and you're an investor, are you going to be okay with getting a 5%, 2% above inflation rate? Probably not.
Right.
Um, so that seems like unlikely right now. But those are kind of the two balancing acts right now that we've got going on. So that was the main thing I wanted to say is that the bond market is what determines interest rates, and it's likely that I'm still optimistic that we're going to see maybe interest rates maybe go down a little bit. I think that right now, though, to your original point about like what should buyers do, I mean, I think right now
Mm-hmm.
is actually a pretty dang good time. Like we're sitting at like
Oh.
6.25, 6 3/8,
Mm-hmm.
something like that. It's the lowest that we've been all year. It's the lowest that we've been since this time last year.
Yeah.
Um, and like a lot of folks are sitting on 7% interest rates, and I would take advantage of this because I'm getting people calling and asking, should I refinance? And I'm thinking, the best case scenario in my view is that maybe we get down to like 6%.
Yeah.
I'm not that optimistic that we're gonna get too far below that, but if we do, then refinance again. That's kind of how I feel.
So you're saying, is there a cap on how many times people? And I know you're not a lender or whatever, but have you seen anyone refinance, or have you refinanced like multiple times
Well,
in a row like that?
I have refinanced multiple times in a row like that. I mean, I bought my first property in 2015,
Okay.
2016, something like that, and rates were dropping. So for the next 5 or 6 years, I refinanced as rates kept on going down. I think my first interest rate was like 5%, something like that.
Okay.
And then and now, that I still own that first property and we were sitting on a 3%. So have I refinanced? No, because I'm pretty happy with my rates. But my buyers who, are still active in the market and buying property, and, like some folks still or they're sitting on that 7% interest rate. Anybody who bought property this year basically has a 7% interest rate.
Yeah.
And, you know, they should refinance. But some of them are holding out, because maybe it gets a quarter point less. Who knows?
Yeah, I mean, there's a possibility. So like I'll pull this up real quick. Hold on just a minute. Let me show. So even just taking a look at this, what the markets think is going to happen in terms of the rates. Like this is for the next FOMC meeting on October 29th, and this is what you're talking about is the markets seem to think there's a 94.6% chance that we'll get another quarter point cut. The Fed will cut another quarter point in October, and then another quarter point, or 84%. The markets are thinking 84% chance that we'll get down to 3.5 or 3.7 in that range, another quarter point. So let's say, and this is not financial advice. We're not financial advisors. We're not, but we are people who follow markets and try to help people, navigate this stuff. So you mentioned like getting down to like 6% by the end of year. You think by the end of Q4 we'll be down in that range, hopefully?
Hopefully being the operative word there. I'm not that confident that we're gonna necessarily. I think it's certainly within the realm of possibility. I don't think
Yeah,
it's like
I'm not banking on it personally. But
yeah. I mean, and the reason why, and this is why this is coming up, because folks are hearing about the Fed dropping rates another half point by the end of the year and thinking that we're gonna end this year at 5.75. But that's not it's just not the way it works. And so that's why I'm trying to get the message out. Like, take advantage of what we got, because right now is really good. And if we start seeing inflation data coming out and we're starting to see indicators that, ooh, inflation is actually worse than we thought, and it's starting, and more importantly, trending upwards, we're
Yeah.
going to see the bond market react to that information. And it is not impossible that the Fed could continue dropping rates and we could actually see mortgage rates go up again.
Yeah.
So it's just like it's like this really this thing I feel like we've been talking about for years, but it just isn't sticking. So it's just like right now we're in one of those times where it matters to like really like those two numbers might go in two different directions for the next few months, and it might not. Maybe we see mortgage rates go down. I mean, nobody knows, least of all me. But
yeah, I mean, I think it's one of those things you just have to follow and keep up with. Like, like we're at, like even before, like in the last administration, for example, like when under that guidance we were going for a soft landing, and actually it was kind of working, meaning that you're balancing the inflation and the rate, and and it was like this plan that we had that was like multi-year, multi-quarter plan, and we were going along just fine, trying to balance.
I would call it a successful landing. I mean, we got down into the sub 3% range, and I mean, we didn't really see the market crumble. Like up to this point, conventional wisdom that was that in order to break the back of inflation, you kind of had to go through a recession, and we did it. I mean, we avoided a recession. Like that's pretty.
Because that was hard, man.
Bravo.
Like that was a hard years.
They were, yeah.
So I mean, I think, and for even me, like even still to this day, I think there's confusion, the confusion between the bond markets, the 10-year treasury. Like I look at that as like the safe investment, whereas like so you head for shelter when things get kind of hairy and the interest rates go up. That's the way I like to think of it, because when I first got in, I was just learning all of this. I had a hard time like understanding the 10-year treasury versus the bond markets versus like the Fed rate and and what that meant, and then mortgage rates. So you have these three things. You have 10-year treasury. I'm hearing 10-year treasury. It was like, what the hell is that? And then I have the Fed rate, and I'm like, well, what the hell is that? And then I have the mortgage rates. I'm like, wait a minute, like what, huh? And then inflation. And now you're throwing in there's like 5 different things. I'm like, wait, how do these all play off each other?
The world's complicated. Because, I mean, it is. Like,
and then you
really
have humans,
confusing.
and you have human behavior, and you have jobs, and you have jobless claims, and you have all these data points and CPI, and you know what I mean? And it's just like there's so much. But I think that the more you just stick around and not understand it and just try to learn, I think the more you'll understand. But for buyers and sellers, or buyers more so, just focus on you. Like,
Yeah. And that's kind of
what's
the
the
punchline
rate
here.
and can I do it? Like,
Yeah. So to answer your question more accurately about can you just refinance, forever and ever? There's a cost to refinancing.
hmm
So that's why it's not like a immediate no-brainer that you should just, like, yeah, go get a lower rate. I mean, like, it's understandable to pause, like, if it's going to be less next week, then I should wait till next week, you know? Um, so I mean, that's a rational thought process. Where I'm approaching it is to, like you said, do your own math. Think for, what's going to be, like, does this work today? Is this a
right.
better outcome? And if it's like a substantially better outcome, the future is not a promise. Like, we don't know what's going to come next. And the likelihood of a substantial drop, most economists that I'm listening to at least don't anticipate a substantial drop from where we are. There, like, maybe it goes
hmm
down a little bit, but it's like there are a lot of people sitting on the sidelines who can drop their mortgage rate by 3/4 of a point right now today, or a full point, today, and save themselves. When we're talking about, in depending on your price point, could be a few $100s a month to $1,000 a month. I
Yeah.
mean, probably not, but probably mostly like $300 to $500 a month. But like, that's real
That's
money.
a
That's six
lot,
thousand
man.
dollars a year. Yeah, and you look at like how much is it going to cost me to refinance. So that's usually the kicker, and it's about 1% in general. But if you've got like a $600,000 mortgage, 6 grand, something like that. So like, if you're able to recoup your money, usually it's going to take like 2 years or something to recoup your money. And that's kind of the calculus that you should make, is like, do I think, like, is that a worthy investment? And if you refinance now and rates were not, if they dropped an eighth of a point or something, then I guess you left an extra $30 on the table or something like
Yeah.
that. But conversely, if rates start going up, same thing. It's a double-edged sword. And I'm
Yeah.
just saying it's a pretty decent time right now.
Okay. And so basically, and I think I want people to understand, and that's we're gonna move to the next segment, because I want, if Jess is listening, I want her to know I'm not to blame for the,
Yeah.
like, I don't want to be in trouble because she's
Yeah.
got two kiddos that
Yeah,
are
a
under
3-year-old
3 years
and a
old.
2-month-old. So I
Yeah, so I want to
gotta
get you
get
back
back
home.
on.
But like, so people can reach out to you. And also, like, I think it's important in this time frame more than ever, realtors are important. As you just heard us talking about this, always reach out to your local realtor, and if you want that market knowledge. And that's what we do here at Abode. So like, and Ian does that at a high level, as you just heard. So make sure that you reach out to him. Are you ready for the next segment? It's not gonna be very long.
Oh yeah, baby. Let's go.
All right, we call it fill in the blank. All
Yeah.
right, so your job is just to fill in the blank. First question. The ringtone I definitely had on my phone in high school was.
Soldier Boy.
He said that so fast.
I gotta bring that back.
I'm dying. I'm dying. Oh, that is comedy. The most overplayed song at every 2010 school dance was.
Probably the same thing, but Party of the USA for sure. It was
Party
definitely
of the
Party of the
USA, Miley
USA.
Cyrus.
Yeah, yeah, yeah.
That's a jam though. That's a bop. I'm
That
not
is a
gonna lie.
jam. Yeah.
The Facebook status I'm embarrassed one I once posted said, I probably, if you can remember.
Yeah, I'm not even gonna. Why would I want to bring that up?
All right.
Gosh, I guess it's probably like I used to like post like it would say like Ian Broadie, and then I would do like is doing. I don't know. It was like something where I like finish it, and now the way that it reads is different. I don't know. I didn't
It's all
post that
good.
much.
You don't have to, I don't want you to implicate yourself. You don't have to worry about that one. The show I binged on Netflix when it first started streaming was.
Game of Thrones. I mean,
Yeah.
big time fan over here.
Yeah.
We were so excited. Of course, the last season was, controversial.
It
but,
was what it was. But like,
yeah.
if you said Game of Thrones was the GOAT TV show, mine is The Wire. But if you said it was Game of Thrones,
I gotta watch The Wire. People tell me
I
that.
wouldn't disagree with you.
Yeah.
Because Game
No,
of
big
Thrones
fan.
was, The Wire is similar in the sense that you had all of these characters, and they just they created a world. You know what I mean? And The Wire is
Yeah.
the same way. It just happens to be Baltimore. and there's social commentary though. Like it's real. Like it's like these are real Baltimore people in this show. The writing is just
I've heard great things.
I go back and watch it from time to
Yeah.
time. Anyway, just because it's just that good. And
Yeah.
yeah. So the Game of Thrones, same energy where it's just like you have all these characters as they created this whole world, and Game of Thrones is like top tier. So yeah,
Yeah.
great show.
Something Jess and I were just talking about this yesterday, actually. A movie, if you had asked me about, Swan Song, completely different content from what we're talking about. But have you heard of that movie, Swan Song? It is fucking good.
Okay.
It's like super sad, but it's like not at all the same category as The Wire or Game of Thrones. But that's a really good movie, and I'd recommend that to anybody.
I'll go look at it because we're always, you know how it is when you're flipping through movies and you can never agree on something.
It's like Apple TV is that one.
Okay. Swan Song on Apple TV. I'll go check it out.
Yeah.
All right, last one. The sneaker everyone wanted to rock senior year was
Air Jordan.
Yeah. Retros.
I had Air Force Ones though. That was that.
Oh yeah, the Air Ones. Yeah. Hey, the ringtone one had me dying though. That's funny.
Yeah.
All right, good job. You passed, man. Flying colors. Fill in the blank. So, how do people get in touch with you if they need to get in touch with you and learn more about?
Give me a call. As you heard, I'm old school. I'm an old soul. I'll stay on the phone with you. We'll talk about the economy, bond markets, whatever you want.
Yeah, man. Well,
give me a call.
Ian Broadie, OG, Abode OG. Man, you were the first. You were the first new
first new, exactly.
Yeah,
I think I was like the 9th person maybe who joined, or who
like
was
8th.
part of the office, but the first to join. Was it the 8th? Yeah.
It was you in that first year. It was you, Shelly, Derek, in this order. You, think Derek, then Shelly, and I forget after that. But I know you three were like right that year, and it was like. Yeah, we just were so fortunate and blessed, and you fit right in, and just, man, and Colleen obviously is a big part of that and a big part of our company and just what we do and who we are. But yeah, just we're so grateful, man. Like, so just,
I love it here.
We're just so fortunate, and
I'm not
all
going
of
anywhere.
y'all are so just good people, man. And that's all we wanted in real estate is just good people who care about community, who care about other people, and care about clients and serving people and want to be good. You know what I mean? And just be good and keep learning. And that's everything you embody. And we just are so appreciative of you. So anyway, man, it was good to always see you. So
I appreciate you, man.
Yeah.
We're a bunch of, we got good eggs in here. It's a good bunch.
Yep. Seabrook's coming up. We're going to have a good time, man.
Yeah, maybe it's going to be fun.
Seabrook's coming up. All right, y'all. Well, that wraps it up for this time. Thank you for tuning in to Inside Abode Live. If you're watching live and if you're listening on a podcast or whatever, man, just reach out to Ian if you want to learn anything else about the mortgage rates or if you just need to buy or sell. So hit him up. And with that, we'll see y'all next time.
See ya.
Peace. All right, man.